In this video, we are going to be analysing Zoom, ticker ZM. Now they do have their earnings today. We are currently down near enough 2% on the day, just getting ready to come into the earnings. So obviously, we never know what way earnings are going to do. We never know if it's going to move bullish or bearish. So all we can do is be prepared to play either direction. And how are we going to be able to do this? And we're going to be doing this off the standard deviation chart. So $93 and $98. These are our two closest resistance, being both our first deviation on the 6-month and the 1-year chart. Seeing this again, this is going to be our first layer of support of resistance if we start pushing to the upside, and would be my key focus. Also, I did just want to note, if you want to have a check in the description, Bitget is sponsoring this video. A big crypto exchange, so if you're looking to move into the crypto, signing up, you get, I believe right now, $50 if you sign up and deposit. I think it's $500. Otherwise, I think you get $30 normally. So if you want to sign up for that, again, link in the description. But to carry on with the video, again, $93 and $98 are two closest key resistances. If we break this, obviously it's going to require quite a big spike. Probably would not happen off earnings, but again, better to be prepared. It doesn't mean it has to happen today. It might happen in a week from now if we continue maybe to trend to the upside. So 108.50 will be that next resistance. Going past there would be 123.50. Then going on to $135, then 138. Or kind of 139, because that's more the level closer. And then going on to 172 and a final level at 208. Now, a lot of levels to the upside. Do you need to pay attention to all of them? Are we going to hit 208? Okay, this doesn't mean we're going to hit 208. And it also doesn't mean you need to pay attention to all of these upside levels. Really, you only ever have to pay attention to where you are now. Currently, we are at $80.30. So the key level you're paying attention to is going to be $43. And what key support level are you paying attention to? Well, we see we got a support level at $78. So these are our two closest levels. This is our main focus. Obviously, we're expecting a big move coming into earnings, so we're probably going to break through one of these levels. And once we do, and once the stock starts to stabilize, that's where we can go back to using these technical levels. So going low, we'll quickly go over the final levels being on the support side, and then what we're looking to do as we come into the earnings call. So again, further support down supports 32.50, you kind of use this as a zone. 62.50 and 61.50. Their first deviation on the 6-month and statistical mean on the 1 year. So again, big layer of support there. If we break that, we're looking then at 47.50, going down to $25, and actually just missed it, but one at $32.25 as well. And we do actually have a final one at $17. Again, the same thing like we said to the upside. Does this mean we're going to hit $17? No. Do you need to pay attention to all of these levels? No. Pay attention to where you are now at $80, so 78 and 92 are going to be or $93 are going to be our key focus. Now, we're coming into earnings. How are we going to play these levels and kind of look to trade these levels? So for this, we'll just go to kind of a normal chart. We can even throw on some after hours or extended hours on here just to make things a bit more simple. So what we're going to be looking for, earnings are going to come out. Obviously, you will still see volume come in, and you'll also see a big movement. Very rare that earnings come out and the stock kind of just stays where it is. What's likely is, again, you push one way or the other. Again, we never know what direction that is. We can't predict it. That's a 50-50 gamble, really, on what happens. Because sometimes even earnings may come out stronger. Maybe you've got a 60% chance you think that earnings are going to come out stronger than expected. But doesn't mean the stock price is going to go up. Sometimes that's already priced in, or sometimes again, why is their earnings up? Maybe the investors are looking at to be higher, maybe isn't. So even if earnings are good, stock prices can still fall. And that's why I don't tend to trade the initial release, because I think there's just a lot of risk doing it. And again, direction can be unclear, and a lot of the times you can get faked out. I mean, we saw it on the Facebook trade. We saw it on Google as well when they released their earnings. They provided fake outs. Sometimes it's a smooth direction, other times it's a fake out. So it's usually safer to wait it out. And the thing I do and look for is stability, and that's when I look to start trading. So what this means is, let's say we get a really sharp move to the upside. Maybe that was a fake out. We get a sharp move to the downside. We pull down to, say, $78 or $79, whatever it is, and now you start to see volume decline. It starts to decline, and the really it just isn't as volatile. We're not moving anywhere near as sharp. We're not getting massive candles. We're starting to get a bit more stable candles. Once you start to see this happen, again, another thing you can be looking at is level 2. is volume starting to decrease, or orders on the bid and ask starting to decrease? As soon as you start seeing this, people have time to think about it. Okay, now we know, let's say it goes to the downside, we know, okay, they have taken this bearishly, we are going to most likely stay down until at least coming into the open. So how can we trade these levels? Now, because it has stabilized, we can now go back to using our technical levels. So if we're at, say, 78.50, if we start to push down to around $78, again, now we know this is a support level, the stock has stabilized, so we can start trading off these technicals again. So again, this is where maybe I trade a bit more bullish. I may be thinking coming into the US Open, we could see a bounce coming off this level. And again, that can provide the trading opportunities. But really, if you're trading off technicals, it's much better to wait for the stock to stabilize. Again, if you obviously have a strategy to trade earning releases, then so be it. But I would never trade technicals until the stock stabilize. Again, this may be 5 to 15 minutes after the actual release, but trading it before that, again, off technicals can just be very, very risky, because fundamentals are always the key driver of the market. So trading off technicals when big fundamentals have come out is usually just a recipe for disaster. But anyway, I hope you enjoyed the video. If you did want to, drop a like and subscribe and check out one of these 2 analysis videos.